Okay. This is XLE Energy. This is so you want to see if you're going to be in the stock, if you just have to be in the stock market, you want to see stocks that like and what do you call that shit? I can't even think of it, but they have a base though. So long story short, you want to look for cup and handles. This isn't really, but this can be one. It's just the ugly one. But your left handle, you want to see it hold, being able to come. It comes from the bottom, but then you want to see it hold, consolidate. You want to see a base right there. Then your cup, and then um, your right handle has to consolidate. You want to see it make a bull flag basically. You got your pole and then your flag consolidate, and then the breakout, and it should rip. Um, Once you see it consolidating and holding like this is letting you know that this stock is a strong stock or a strong ETF or a strong index, whatever it is. Um, so let me see. I had notes on my targets. Targets. Damn. So what I wanted to do was so there's many ways you could do this, but I'm gonna make this into a video. But right now, uh, energy is undervalued relative to gold. Miners and capital may rotate here. Um, so I was looking at OIH, which is oil, because you need oil for energy, right? So why oil services lag producers early in the cycle? They outperform later when capex ramps. They benefit from higher oil prices and increased drilling activity. Um, and then the energy sector is steady exposure. Um, that's where the cash flow, dividends, and it has less volatility than the oil. So I was going to use it to balance the oil. I was going to buy shares of this, but only once energy confirms that the money is rotating there. Once energy is confirming that, then I was going to buy shares for oil because oil is very volatile. It moves crazy. But um, let's see. This is just me trying to capture where the money is rotating into before everybody catches on, basically. Um, the so XLE is less volatile. It pays you to wait, dividends, and the stability. It confirms the energy is starting to get money in. Um, so I wanted to start a position there with leaps, and then once energy leadership is confirmed and the oil prices stay up, and XLE is holding this trend, then I was going to add IH as well for shares. Data because energy is gonna if I just do energy, like if I was to do XLE shares, that would just it would consistently get me money, but not like a lot. But if I add oil, it'll confirm what energy is doing, and that's where the money will come in fast because the oil moves like crazy. Um, so, but anyway, I was looking at a leap on XLE, and it was for, let me see, I had the target. Uh, I didn't want to like I really didn't want to hold XLE. I could have did shares and just held it for 2 years, but I just want to do leaps and catch the rotation and get out. I don't really want to be in nothing long. Um, so I was looking at February, no, my apologies, January 2027. Um, and um, it was January 2027, $50 call at the money. Best balance of leverage and survival. Um, what was it? And it was about I think 600. It wasn't that much. But it has strong delta though, and we'll have enough time if we're wrong. And because it's at the money, so $60 will be like my first target, then 65, and then 70. But we buy a $50 and we just see it going up above 30, I mean $53, and it starts to consolidate. We still have enough time. I'm pricing in the consolidation. Um, the Greeks on here is beautiful. Uh, so I could play that with the shares and do like I'll like if I had 1K, I would purchase one leap of the for a starter position of the XLE $50 call, and that's about like 600. I don't know about today, but like 2 days ago. And then I will buy a share of this, or I could just go all in on XLE. To be honest, I'm looking about just going all in, just playing leaps on XLE, and we're not going all in off the rip, but just a starter position. I'll grab one contract to see how it plays out, and then once I see us hold specific levels, I'll add another contract. Um, so if we were in that $50 call, um, and if XLE got to $58 to $60, which it would do with no ease if it passes 54 because all this consolidation right here. The next level I got for XLE would be 65. So basically, if XLE went to $58 to $60 and the move happened fast, we're already at 51. That'll put us up 40 to 60% on that contract. $62 to $65 if it goes there, which would be the target after $53. That'll put us 80 to 120% on that contract. And then 68 to 70. But my third one is at 76. That'll put us 150 to 200. Long story short, I see a 200% plus banger on this XLE if I'm correct. Um, I just wanted to catch, so this is why I didn't get in yet because I'm a break and retest trader. So, but long story short, I see this as a 200% banger. I see, I see us taking $600 to 3K on this play right here. Um, and that's just for one contract. So I see this as a banger. Why I didn't get in though? Because I'm a break and retest trader. You break your $57 and I'm so patient. Um, I know not to chase nothing. If it leaves me, it leaves me. I'm waiting for this, which is doing now. I thought it was going to leave me, to be honest, because this first candle, but then the wick though shows me that okay, buyers start to give out. So now this month you see us testing back up here again. So I'm on the monthly because if I'm going to be in a leap for a year, why do I want to be on the daily? I'm going to be in this play for months. So I want the retest up here to this $54 and then a rejection, what we're getting now, and a retest. and I want the retest. So we'll go to the weekly to see where the retest will be. So the retest will be at 47. So I want to see a rejection here, what we're getting now. Then a close under the 5-day moving average. I want it to take its time though. The more we consolidate, the more liquidity we got to snatch and rip. So I wanted us to reject chapter 54, come down to 47. If we can get $47 and we get a nice wick off of the 10-day, so my entries is $45 to $47. If we hit these areas and we bounce and we get a wick like this green one, like a pin bar, is what you want, this wick right here, then the body's up here, that's a pin bar. That's letting you know buyers is here. If we get that here, I promise you this is going to be for sure 100%. 100% more or more on this contract, but really I'm seeing 200% bang on this right here. Um, yes, Kai?
Hi, thank you. Question. For your pullback, you're looking for a candle close on that pullback or just like a wick tap?
On up here?
Okay, so like you said, you'd wait for a pullback for the 44, 47 area, which is
Hmm.
about, I think that's like the 50 moving average area. So would you want it to tap
Hmm.
that average or actually close
The,
below it first?
no, I don't want it to close below because then it's gonna
So just a wick.
if yeah. So this pin bar right here, how it touched my 10
Mhm.
day, my green line.
Yeah.
That's exactly what I want the candle to do. I want it to do that on the green, but if we close below the green, that's fine because that's my 10 day. If we come down to the 20, this is your support zone in the pullback, whether it's uptrend or a downtrend. So we get that 20 touch right there. That is the perfect entry. And we got that pin bar. We'll wait for us to close back above the 10 day. And then once momentum come in, then you enter. So 45 to 47, you can enter. And then
Okay.
once my depending on where we enter, I'll put like the stops and all of that in there. But this risk to reward is going to be crazy on this play. Um, I gotta let my dog back in. Does that answer your question?
Yeah, no, that makes sense. Thank you.
You're welcome. But okay, so yeah, we're starting to see the rotation. This play right here, man. When you see if you ever come across a stock, mind you, we're on the weekly. Each candle on this chart represents a week, 5 days, and one candle. Look how many days we consolidated. So liquidity grabbing is basically you had a pot of money. Sorry, but you gambling, you playing dice. All the money is in the middle, and we around basically. The money is in the middle. So this is the pot. When stocks consolidate, like how it's doing right now, we're just throwing money into this pot. The object of this game, which one of us on the outside, which one of us is going to snatch this money? And if we're going to run up or down with the money. Hey, stop. So when you run up or down with the money, you're snatching this whole pot right here. And basically this money is like horsepower to a car. Ace! It's like horsepower to a car. The more money you have there, the more horsepower you have in your car. So when we have that, it's just gonna, if we go up, we're gonna rip up. If we go down, we're gonna rip down. The more you consolidate. But we have 2 years of consolidation. I haven't seen that. The last time I seen that, I was in HLT. It was one of my best bangers that I've had, and it was only like 3 months that it consolidated. Um, it was here. Oh no, it was about a year actually. Wait, October. It's about half a year. It did that and consolidate, came back down. Matter of fact, it was over here when I caught it. So over here, so July. So I was right. It was about 4 months that it consolidate, and look at the rip up from just 4 months that it did. Oh shit. Just 4 months. In a year, it ripped up 209, 150. It ripped up about $50 in a year. And then since then it's $300. 150 since it's almost up $200. So if we can catch so that's the thing. If you wanted to play shares on this, it's cheap as fuck. I'm thinking about I don't want to overexpose myself in XLE, so that's why I was going to just grab the leap for XLE, and then the oil would capture my benefits. But the thing about XLE, I'm gonna really like tap in to see because I want to take advantage of XLE's dividends, really, because that'll pay us so we could do it in the smart way if I'm in leaps, and then I get shares. The shares will pay me when we consolidate and range on our leaps. It'll pay for the theater that's killing the leaps. Um, this right here, this is crazy. This move is going to be so explosive, and I honestly want to capture it. I think I'm gonna get shares and hold it for 2 3 years as well, though, for real. But I'm gonna tap in more. But for sure, I think I'm gonna get shares and hold it for 2 3 years. And this is me just catching the rotation. It was tech for man long. Money it has to rotate out. Um, I haven't touched no stocks at all. This is the first stock that I looked at that I've done homework on for days. Like this is the first and only stock that I've done since probably like 8 months now. So I really I'm confident on this play right here. Um I just hope if it does retest that it don't fail, but it don't look like it's gonna fail. I just don't wanna we're not gonna stay in this range. We're not gonna get stuck in this range. I won't become a trap buyer. So I'm gonna wait for it to reject here, come down here, and then it has to bounce. It has to bounce because if it fails and it closes below our 20, because we want to rush, we'll become a trap buyer and it'll do this consolidate. But this right here is gonna be a money maker for sure. Did you? I'm not sure if I closed last time. You got a question, Kat?
Yeah, I do. Sorry.
No, you're fine.
I'm just, I do a lot of questions just to just confirm. I'm a visual learner, so when I hear it again, it makes a lot more sense to me.
Hmm.
But I have a question about August of last year on the same chart you're on,
Hmm.
where the 50 crossed the 200. What's the significance with that in terms of your, well, I don't want to use the word prediction, but what you're saying right now, what you think is going to happen? Like how did that cross in August help to solidify what you're seeing right now?
So I don't have the 50, but I'm guessing it crossed above the 100, right?
Yes. And that's the first
Oh,
time, that's the first time the 50 has crossed above the 200. Because I guess the 200 didn't start showing up on the charts on, well, I don't have it on my charts until 2015.
hmm.
And it never, that's the first time it's crossed in like 10 years.
That's a good catch. And that confirms everything I'm saying. So I'm a moving average. That's like I love the moving average. So basically, for me to know when a bull run is coming for an individual stock or ETF or index, whatever, my moving averages
Mm-hmm.
has to be stacked in order. So I use the five. the 5-day moving average. That's for strong momentum. I use the 10-day. That's the short-term trend. I use the 20. That's the pullback in the uptrend or downtrend. I use the 100. That's the big price dip, like where you want to buy the dip. The 200 is the front line. Buyers are in control if you're above it. Sellers are in control below it. So the 5, the 10, the 20, the 100, 200. In order for me to know if this stock is really bullish, I need my moving averages to all be in alignment. So my 5 from low to
In
high, if
order.
we're going to be bullish,
Yes.
my 5 has to be on top, then my 10, then my 20, then my 50, then my 100, then my 200. So when you seen that 50 crossing, it was just confirming and letting you know, hey, a breakout is about to happen. That was telling you that in August. So now you got the 5 on top, the 10, the 20, the 50, the 100, the 200. It's ready. The only
Yes.
reason why I didn't get in yet is because my 200 is flat, my 100 is flat. My 20 just lifted off the floor. So now my 50 is probably about to lift off the floor if it haven't already. My 100 got to lift off the floor. But when we come
Turn
down to
left
reach,
for Goodwood Avenue. Then you'll take your first left onto
where
Goodwood
you going,
Avenue.
Jacoby? But when we come back down,
My bad, yo. I
now
just
you good,
jumped in.
bro.
I got the making swerves out here, like KT would say.
Oh
Peace,
gosh.
King. I'm just playing. But
Okay, so that would make that makes sense.
for
Because I'm
uh-huh,
looking at that on the monthly chart, by the way, just in case anyone is trying to follow along. I saw that on the monthly chart.
uh-huh.
So that's why I wanted to see if that also helps with your confirmation. Because I
Yeah,
normally use that myself to kind of help me reassure. So I just want to align everything together. So thank you for that.
smart. You're welcome. Is this the one with the cinnamon buns as her profile?
Yes.
Peace,
Yes, this
Queen.
is me.
Word. I got you. You just helped me realize that this laptop is touchscreen. Wow, that is
Oh,
nice. So when we come back down to retest this, wow, touchscreen. When we come back down and retest this area right here, um, it's gonna smack your moving averages, and your moving averages, when you touch them, you'll see them like move up, move down, flatten. They'll move. But when we come down and touch them, it's gonna tap them like bro, wake up. And if we bounce off of the 10 or the 20, then the 100 and the 200 are gonna start to lift up finally. And that's why I'm waiting for the retest because I'm a I get in at the perfect times. And if I don't get in at the perfect times, I'll get stopped out. My stop loss helps me boost my entries. Um, if I ever hit my stop loss, then I know my entry was ass because I shouldn't hit my stop loss. Um, my entries always is it's like it helps me if I'm wrong, it's gonna let me know. I'm not gonna get in the play, not have a stop loss, and notice that I'm wrong weeks later. I want to know as soon as I enter if I'm wrong, because if I hit my stop loss off the rip, then my entry was way off. But long story short, I'm waiting for the retest to come down here, and then the moving averages should be ready. They should all start pointing up. And I'm a momentum trader. You'll start to see volume flushing on this ETF once the 100 and 200 lifts up. And I think honestly, I think this is 600 to 2K. Like I nothing in the market is 100%, but 600 to 2K, I would say 80%. And I think we hit 3K like a 65%, 70%. I think the probabilities is high of this playing out. We caught it at the right time, and you can see the breakouts happening now, but this is just for your people that just want to rush in because they see, oh, Exxon is moving up now and stuff like that. So they just jumping in. They're going to become our liquidity. That's going to help us rip up. Um, and that's another way you could play it. You could like you don't have to play it how I'm playing it. You could take advantage of your XOM because let's see what XOM is doing and what's some other ones. I don't know why I put this. See, whoa, look at XOM. So look what it was doing, consolidating for how many years, right? It's the same thing. You see the cup and handle basically. Now look, the consolidation now look is ripping now. Um, it broke the 118 level. Now it's at 144. This is what you like to see, and now retest is coming back down. 130. If you want XOM, 130 to 132 is your entry. If you can get it at 125, man, you got the perfect entry on this stock. Um, XOM, that's a banger right there. But remember, XOM, you don't want it now. You don't want to become that's one thing that just bothers me so much. When stop getting in at the top. Like we be so scared of missing out on the play. We'll get in at the top and become liquidity or just like stuck in this play forever. You want to get in on this 125. I would say 125 is like your best entry. 125 to 132. Anywhere in that area you want to get in. That's where you gotta understand what candles are. Like it'll let you know the entry on this. So XOM, let me see what else. Um, I thought I wrote it down. So I'm gonna post the levels and entries of XOM. I'm gonna post it for XLE, XOM, and whatever other ones because we're about to look at more. So XOM, I gotta put that in my notes. I'm gonna give the like a good entry points and good targets, and then it's hard for me to do the stop loss because I don't know. Like I said, 125 to 130, 132. So I'll give a rough estimate of a stop loss as well because if you're going, me, I'm all about risk management. If you're going to give plays, you got to have the stop loss on that play because I'm just telling you, like, hey, this play isn't a guarantee. It could go wrong, but if we are wrong, we're gonna um we're gonna manage that risk. That's very important. So we'll definitely have a stop loss on that. So XOM, XLE. And OIH is just that was just what I was looking at for shares, the oil. That's just gonna be the oil wouldn't be something I get in right now. That's only once we see energy really ripping. Once it's confirmed, then we'll do the oil to capture the whole movement. Um so but I'm thinking about just XLE to be honest. So Chevron, oh I like so I like damn, we got XOM, Chevron. So
Yo, yeah.
what's up, bro?
Can I throw one out? Can
Yeah,
I throw one out? A suggestion out there for you to check out. Looked at it real quick, but Bloom Energy, BE.
BE.
Yeah,
Energy.
look like it might be a little slight pullback.
Yeah, for
I was
sure.
looking at the 4 hour, 1 hour this morning. I didn't break it down, but I just glanced at it early.
Yeah, this for sure. I forgot about this. Damn, yeah, this shit's ripping. 100 right there. So this is another one. This one, this one is daily weekly. This one's gonna take off before every other one, possibly. Because the pullback is already happening. So 130 is gonna pull back too. Just has to hold that level. It's getting ugly up here. So this is not one that I'm confident in. This one's gonna play games. Wicks, 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 Wicks. I don't like seeing the Wicks all up here in this area up top because now when it come down and retest this 130 area, I don't want to get in on this pullback. I want to wait until it could clear this 170 level, and that's at 170. It's it's okay because this is a cup and handle as well. So I rather it come down. I think it's going to consolidate. So once it comes to this 130 area, if it comes down to 130 area and then consolidate, I like it. I like it if it could do that. I want consolidation in this market because if you don't have, because remember, candles bounce off candles, candles reject off candles. My candles are the beams that's holding up the structure. The more candles I have in one area, the thicker my beam is that's holding up my structure. So my cup and handle, you're gonna see a lot of consolidation. All those candles that's consolidating is starting to uh form me a solid support. So if we come down, we're gonna bounce right off those candles. So a cup and handle could hold in any market. In a bear market, it could hold still. So that's all I look for in a bear market. And that's something that I learned years ago from Mark, however you pronounce Mark Minaveri, bear market cycles. He shows you the cup and handle is one of the best um patterns to use in a bear market. That's how you capture a strong um stock, and more than likely fundamentally wise, it's going to be strong as well. Um, so BE is one to put on the watch list. Just wanted to consolidate more. Here we had consolidation for years. So 187 is where I want the rejection because we're breaking retest traders, but I don't want it to do what it did here. Fell. Now when it comes down, so even if it goes back up, we still got 187 basically. Reject, and then I want it to come back down. 168 basically has to be support. We cannot close under there. We cannot fall apart once we get to 168, we need bounces. I don't want this to happen in the past. We need a bounce, and then it'll let you know that it's a good chance that we're about to break out. So a rejection, go up, come down, bounce, and then go up. But that it's not that simple though. It could reject, it could come down and go up. So a retest, I always say a retest happens 2 to 4 times. So it'll retest an area, it'll go up, come down, one retest, go up, come down, two retests, go up, come down, three retests. And then it could go up, come back down, four retests, and go up. But 2 to 4 times the retest, and then it'll make its decision if it wants to go up. And that'll be good if it do that, because then that'll be a bull flag. Because we got the pole right here, and then we do that, consolidate right here, we got a flag, and then we'll rip up. So CVX, Chevron is one, and then we take the base and we take it down with the swing low, but I want the most touches. So I'll take it to like here, and it'll let me know where the targets will be. So this is the area that we want to break. Oh, I took the wrong position. So we want this area. So, and then I'm looking right here, all these candles right here, the most candles, taking the bodies of those candles, and that's how I'm going to place my Fed. Oh. And this is going to tell me where Chevron will likely go. So the first target would be 250. So we catch this is a good play as well for leaps is what I'm looking for. I'm not looking for swings in this market. Um and we're only looking for leaps because we're trying to catch the rotation of the money. Um I won't do this for any regular type stock. Um AVGO, none of those. So 187, so 250. And if it was shares, 250, then you got 350, depending on how many years you hold it. 2, 3 years is the most that I'm holding energy for though. And then it'll be risk off. Probably people start dumping out of it. Um, so CVX, okay, that's energy. And then my oil, I love Devon. I don't know what it looked like. I haven't looked at it in a minute. See, oil is lagging, but once energy confirms, if you want to add, you see your energy is performing well. Now it's like, okay, I want more. And so what you're gonna do is once your energy is confirmed, you go to your oil chart. Now you start to see like, okay, now oil is starting to go crazy. And you'll see oil above the 200-day moving average on the weekly, that $48. Then your 200 needs to rise up. And then oil, you add oil. Now you got a leap for energy. Energy's confirmed because that's taken off. And you could be like, okay, well, he want dividends and stuff like that. You could look to see what you can really tap in to see what is offering the dividends and stuff. Because I want dividends so I could capture that exposure to the consolidation. So I probably shares of Devon, you could buy a whole bunch of it. It's stupid cheap, but when it rip, it's going to rip. Like right here, it ripped from $10 to 63 or $8 to 63, and it did that in one. It did that in 2 years, less than 2 years, more like oops, November 2020 to May 2022. So a year and a half, it did $60. Imagine we held 200 shares of that or more. Like this, this could be a banger. Um, Oil would just confirm only oil once energy is confirmed though, and then I'll look into that. So I'll put Devin. I don't know if I would do leaps or shares, but I'm gonna just make a one post and it's gonna have all these stocks and it's gonna say what I would do if I were to pick these, and then it's gonna be the ones that I'm going to pick. And then EOG, we're looking at winners. We don't care about me at least. I don't care about most people get so wrapped up on choosing stocks that everybody know about. I just want winners. And the winners is going to be ones that people aren't looking at more than likely. Like when the video was lagging, nobody was even thinking about AMD. Once in a while, they'll see, oh, you'll see that chart and be like, oh, why is AMD's ripping up and not the video? Um, don't get caught up in the names or like everybody wants to trade SPY. Now, look, this is EOG. This is bigger than what we've seen on energy. Remember, we seen the consolidation and but look at this large dip right here, and then this big consolidation. Same amount of years, 5 years. Once this goes up and rip up and breaks out this funky ass range, 150, this stock is going to rip, and that's we're just catching the risk on. And I'm talking about rip like this. This is crazy right here. Crazy move right here. We just want to see rips like that. But now we're not in the teens, we're in the hundreds. So now the moves is going to be larger now on EOG. So EOG, so right now we got XOM, XLE, OIH, CVX, DVN, EOG, and then so high leverage. So these EOG and DVN, those are going to be very volatile. They're going to really move with oil if oil starts moving. And these companies that I'm about to show will be the laggers. These will explode after oil. So after energy is confirmed and after oil is confirmed, then you'll see these start to. So then you're like thinking like, all right, where's the laggers at? That's when these will come in right here after the oil. SLB, nice pullback too. and now you're back above your 100, your 200 on the weekly. You got a bull flag starting to form right here. Your 10 crossed above your 100. Your 10's about to cross above your 200. That's a buy signal, but just gotta wait though. 62. But this will be confirmed after energy and oil is already confirmed, and then you're looking, you're already looking to double your money because if it ripped from here, it's at 50. If you got in at 60, 100, we're definitely going to tag more than 120 because this is a nice pullback here. So you're going to go higher. So you'll for sure double your money on this play. So SLB, that's the best one out of this lagger style. And then Halliburton, HAL. Right? Yeah, HAL. Wait, is it? No. This is H. Is it this? Because if it's, all right, I was about to say, that is not.
Sorry to
Yeah.
cut you. I'm very upset with myself for that one as you're about to talk about it. I
Wow.
had that because I had a leap on it when it was at, I think it was $16, like a $20 call from the beginning of last year for June of this year. And then I closed the position because I just psyched myself out of it. I think I overread the charts or something and
Yeah.
psyched myself out and closed it. And then I watched the thing rip to like my strike and beyond, and then obviously pull back. And I was just like, oh man. So it's
Damn,
funny that
that.
you mentioned that. And I'm like, nah.
Yeah, damn. You know, that shit hurts. That definitely
It
hurts.
does.
But
Because I got it at a really sweet discount too. Because I love a discount.
mhm,
I'm the type of most girls like purses and shoes and stuff. I like a discounted leap or swing play.
yeah,
So when you get something for like under $200 and then watch it go to like $15, $16, it hurts.
it does. And that's all I look for. I look for discounted, um, discounted prices. That's what everything. Like stocks, even when I was doing wholesaling, discounted property, um, you want to get it as cheap as possible. And that's why I'm looking. Anytime you see me pull up a chart, it's going to be these stocks are going to be under $400 for sure. Um, and a lot of them is going to be in that $100 range or less. Because I know what my account is, so I don't want to be playing Netflix because Netflix will hurt my account size. Netflix is well, not Netflix now, but what it was before though. And like your Chipotle is what it was before. So this right here is for sure going to it's for sure going to double your money because it's going to go past $70. Um, it had a nice pullback, and now your 10's crossing your 100, 20 about to cross your 100, your 10's about to cross your 200. You got a bull flag. It's letting you know, like, and now you're above the 200 and you're setting up your bull flag. It's letting you know, um, that these are becoming the risk on everything that we looked at so far. Nothing we looked at was like, this chart don't look good. But if you go look at any other, not any other, but a lot of other stocks that we've been looking at, they're going to be iffy or they're just going to be ass. Um, so how's one? This is a lot to choose from. And then BKR is the last one. And then so but my phase one is going to be the XLE leap. And then once after I start making profits on that, then once oil is strong, we'll do the OXY or the DVN. And then once those start ripping, then we'll add the SLB or the BKR. But I'm gonna put everything down like how I'm doing it phase because the XLE is the engine, and then The Devon and your SLB is the weapons basically. Um, I'm gonna put everything down like my phases. It's a strategic move for sure. So you can see BKR. I will choose SLB probably before BKR because we got to put the fib on BKR. I want to target areas that I know. Oh, we're going to this area for sure. Um, BKR, I got to put the fib. I trust my fib though, but I really want. I want to. I got better risk to reward ratio by doing SLB because I see like we're only at $50 and we once was at 120 and now we're above all our moving averages. We for sure coming back to 120 versus BKR. It's like okay, we're at 57. I know for sure we're going to $70. Then I got to put my fib on to see where else we're going to go. The fib isn't 100%, but if we was already there, it's not 100%, but at least we know that we've reached that area already before, so we could reach it again versus here, we never touched that area. So it gives me more confidence to a play. I should just say that. So when I'm in the play and I see my P&L red, I just look and be like, you was here before. You're above all your move. Like, relax. But if I see this, I'm still going to be a little iffy. Um, so that was the breakdown of what I'm looking for, and it was so important to tell y'all because I know we're getting hurt. The reason of me just showing this because Ab always saying like the market's going to drop and stuff like that. But what do we do when it does drop? Do we just sit back and watch? Are we going to take advantage of it? But in a strategic way, you got to know what you're doing. You don't want to just get into stocks because you could get into a stock that's beautiful, but next week everybody could be taking their money out of that stock. You want to get in stocks where you see the smart money, not fuck, they're not smart enough. Where you see the big money starting to add in. You want to get into stocks where the big money is starting to add in. And then once they start to add in, we want to be big money, so we're going to add in with them. So then once we add in with them, we already in position. So now when this chart hits the radar on like the cheddar flow, and it'd be like on the unusual option chain, you start seeing like, oh, this stock got like 12 mil and something. We're already in that play. So now the public is going to chase, and now the public is going to push us up in the play that we're already in. That's all we're doing. We're positioning for where the money is headed, and we're just waiting for the money to pour in more. And that's all we're doing. And then once the money start pouring in more, it's like, okay, XLE is already ripping. That's doing fine. Now we want to catch the next lagger. Then we throw in our oil. That start taking on. Once that start ripping, then you throw in your SLB or your BKR. And we're taking advantage of every single area. And I'm trying to take 1,000 to 15K or more doing these phases that I showed you just 1K. I'm trying to take it to 15 plus K. I could see 1K going to 15 plus just from the phase one, two, three. The whole breakdown that I gave, it's gonna be fucking banger. And I'm gonna post it on the YouTube like breakdowns of what I'm going to do, how I'm getting in. But these plays probably not gonna be ready for another 2 weeks. So you have time to like see what you want to cut, see what you want to stay in. But hope isn't a play. So don't get into a play because most people stay in plays because they're forced to. They say, I'll cut a play at 80%, but I don't want to even get to the point where I'm down 80%. But I've been there before where I was down 80 to 90%, and it might seem dumb, but one time I knew when I wanted to change because I started cutting the plays at 80, 90. I shouldn't have been there, but I was already there. But once you start cutting the plays at 80 to 90%, that's still good. You're still performing positive behavior. Now it's starting to become easy. Like, this is bad. I don't want to be here again. So now you start cutting plays at 70, then 60, then 50, then 40 under. So now you're good.